Good evening, ladies and gentlemen. We are going to start the session shortly. Thank you for your patience. So, good evening, ladies and gentlemen. Welcome to yet another session on our rollover report. So, we have with us Mr. Manoj and Mr. Gaurav. So, Mr. Manoj is a veteran in derivative market with profound understanding about the subject. Manoj has been spearheading derivative segment for Religare Broking Limited since last 9 years. Manoj has a strong hold on option segment, especially index options, which constitute lion's share in the overall market turnover. His grip on derivatives data enables him to foresee near-term market movements, and for this very reason, we are conducting this webinar. He will be supported by Mr. Gaurav Arora. Gaurav has recently joined Religare, and in no time, he has been our key resource to generate short-term investment ideas. BTech by qualification, Gaurav has a good understanding of charts, and his ability to understand data has been contributing significantly towards wealth creation for our clients. Gaurav focuses on the stock futures and stock option side for the derivative segment for Religare Broking Limited. I would like to invite Mr. Manoj to share his views on our market. Manoj, over to you. You are on mute, Manoj.
Yeah. So I guess I'm unmuted now. So
Now it's clear.
Yeah. So thank you, Swaraj, and good evening, everyone, and welcome to this monthly rollover webinar that we have, and wherein we discuss as to what would be the data indicators that we have for the coming month and what or how the last month went out. So this webinar, I guess we would bifurcate into two major sections. One is we'll discuss about the data pointers, precisely the objective ones from the derivative side, and then we'll have question answers based on very relevantly on this topic of rollover and what the market does along with the strategies that we have. So first thing first, if you remember this month of November, the view that we had in the market was a bullish one, and thankfully the Nifty has been in line to what we have been expecting. The better part here is we expected that the bank Nifty might not really outperform. So if you see 4 to 4.1% is what the Nifty gained month on month, and the bank Nifty also more or less was around 4.2%. So it has been in line to what the indices have done. We have not really seen any outperformance. This is for the month of November. Now, going ahead for this series, that is the December, we have the expiry on 29th. There would be certain indicators that we'd like to portray as to why, on what basis, we feel the analysis might be, or what can be the top picks, at least for this coming 29 to 30 days, which we have as a December contract. So we all know that FIs contribute largely to the index-based trends, not only in the cash market, but especially the Nifty and Bank Nifty. So we look into FI stats, and interestingly, if you always see on an average, FIs have around 60% long and 40% short. But when we have months which exceeds or precedes this number, that is when usually find a trend coming in. So this month, that is the month of December, we have seen them start the month with a 77% long positions in the index versus a 59 to 60% that they had in the month of November. So if you simply compare objectively, we have a good 15 to 16% more long positions or bullishness that we have seen in the rollovers or the positioning from the FIs, and that is reflected more in the Bank Nifty and the Nifty, because we do a lot of objective analysis as to compare what the positioning of these two major indices are, because that helps us dictate the trend in the market. And I always say that when we have the Bank Nifty aligned with the Nifty, that is when the trend has got strength. So first thing first, we have a small presentation wherein objectively we try to portray as to what are the data pointers that helped us make this view and come to this. So the first thing, as you can see, that Nifty on November started with almost 1.09 crores that you can see on the bar graph, and this time we had almost 3 more lakhs. So the positioning here is we have a 3 more lakhs of long position or long rolls that we have seen, at least both from the FIs and the institution and the retail side. The cumulative Nifty has seen a longer positive bias into this month of December. If you look into Bank Nifty, we'll go to another slide. Bank Nifty has got a good 16, 18 more lakhs versus what we saw last month. So these two indices contributes to a good amount of volume. We all know that a good 80 to 85% of the market volumes comes from the options, and precisely Nifty and Bank Nifty leads them. Of them, Nifty, if you see, because of the weekly option and the liquidity, it has more volumes, at least in terms of the first fortnight that we see when a contract starts. So Nifty futures starting with a positive bias with the FIs forming 77% long in terms of index. And also, if you see the last 6 to 8, 12, 8 to 12 sessions, we have seen some cash-based buying. So that adds to the momentum, and we believe that this can go on for this month of December. So the first thing is long positioning. Second is the volatility index. I'd like to comment on this. I guess this would be after almost 12 to 14 months that it is dipped below the 15%, so-called 15%, because I guess COVID levels, it had made a high of almost 80 to 84%, and now it has come down to a good 12.5 to 13. So what it indicates is, if you see the index futures, Nifty and Bank Nifty, both are at a heavy premium, almost 80 to 100 odd points to the spot. So generally, this is a trade when we see the VIX settling to a new 1 year lows. We see there is a spurt in the index premium, which obviously there is a match to that, but we're not getting it there. This is usually a trade which happens between the instruments. So that is exactly why we are seeing the premium in both the December Nifty and the Bank Nifty December at a higher premium than an average. Average used to be around 38 to 40 odd points. And ideally, the last 3 months, if you see, we've not really gone beyond a 24 to 30 odd points. So this surge of 50, 60 more points that we've seen here is primarily because of that. Now, the disadvantage to that is generally we are used to higher premiums because of the higher VIX. Now, when the VIX settles down, we need to understand as to what strategies or what methods can be changed to take into consideration the lower premium. So that would be the second point. Third is, as we always say, we try to see where is the highest accumulation of the call and put option base, because that roughly gives us where the view is. So 19,000 strike on the monthly December, which is a 29th expiry, and same goes with the 18,000 strike. Has the put accumulation. So almost it is closer to 30 to 35,000 contracts. So which is good enough, but not really too strong to say that that might be the level. Generally, levels of more than 50 to 55,000 contracts can still count it. But yes, because this is the first day of the series, we might say that 18,000 to 19,000, this 1,000 points is where the Nifty looks projected, at least for the next 20-25 days. Then there are 4 stocks. We try to look into stocks based on how the positioning has increased, the delivery-based buying that happens in the last 3 to 5 days, and the net rollover. Based on that, we like 4 stocks wherein we have mentioned in the slides. One would be Indian Hotel, NTPC, Infosys, and IndusInd Bank. So just going to the bank nifty part, also as I said, this series of December, if you look, 16.7 lakhs is where the number started, and we are almost double here at 30 odd lakhs. Now I remember such a huge 10 to 12 lakh surge happened, I guess, in April or May, when we had the HDFC twins news come in, and that is when the bank nifty had actually outperformed. So we believe that this is a month, there is a possibility that the bank nifty might again do that. We look into some ratio analysis, that is, you simply divide bank nifty by nifty. So we expect an outperformance from the bank nifty at least, or we believe that the nifty would be supported more from the banking stocks at this point of time, at least for the first fortnight, and that is why we have a positive bias on the bank nifty and the nifty. Now, looking at the strikes, we believe that 40,000, 40,300, these are the strike where the highest base of put writing and call writing is there. Though the put writing is quite huge, so we believe that 40,000 would be a good base, at least for the bank nifty for this series, the entire 29 days of December. And then there is a possibility that we might inch more towards a 43,500 or so. The call writing is quite half of what the put writing is, so the bias would be more towards a put writing of 40,000 strike. Now, furthermore, just getting into levels, we believe that the bank nifty has a potential to go to almost 44,000 to 44,300. For the nifty, we believe 18,600 and 18,800. Now, these are the two levels that we believe the nifty might hit the target or go to, and then there might be maybe some consolidation. The reason why I'm saying this is the VIX used to be 16, 17%, and the monthly swing, that is the positive and the negative movement of the nifty, used to be a good 750 to 780 points. Now, because of the VIX coming down, it has reduced to a 680 odd points. So the VIX is, the volatility has shrunk, or the risk has shrunk, or the swing has shrunk by a good 80 to 100 odd points, which clearly says that now the buy on dips has been affirmed till the time we are above 18,100. So to underline this entire 5 minutes of index view, we would say that till the time we are above 18,100 on the nifty, the bias is positive, and we expect the nifty to go towards 18,600 as the first target and 18,800 as the second target. For the bank nifty, we believe that 41,800 is again the base where there is huge, not only the put writing is closer to 40,000, but also the base of this 30 lakhs of open interest, which is there in December, has a base closer to that levels. So that might act as a good support. And the upside, as of now, we believe would be somewhere close to 44,000 to 44,200. Now I will hand over, before I hand over it to Gaurav, I'll just discuss something about the sectors as well. So every month we try and see as to what sectors might lead. So we have boiled down to a couple of sectors. As I said, banking obviously is the one. IT as a sector for maybe after a couple of months is again seen a good traction, and there is positive bias or short covering that we have seen in oil and gas. So if you see even in this graph, if you can see simply this shows the net difference change between month on month. And if you see, we have seen that majorly in pharma, and pharma would be 91%. And if you see oil and gas, is almost shied away by 10%. So this is one basic simple math which happens in derivative. Whenever there is a change in trend, the open interest tends to sulk, or it is a bit less because there is a change in the view. So what happens is the short positions get squared off, and there is lesser amount of long position, but at least the bias turns. So we believe oil and gas is the sector which has turned the entire sentiment, at least month on month, in terms of quantum of roles, in terms of short covering that has happened. So banking, IT, oil and gas, and FMCG, this would be the four sectors that we believe can outperform. So it's more or less a mixed bag, I would rather say, but the bias would be more on the banking stock and the banking sector. Here I'll hand over the call to Gaurav. Okay, before we go to Gaurav, I'll take the first two stocks. Now, we believe that Indian Hotels and NTPC, this would be the two stocks that we believe can outperform this month of December. The reason is very rational here. If you see, we try to see what is the additional position in terms of derivative long built up or follow up long position that has been made from November to December. And we also try to look into something called as the delivery based buying of the last 5 to 7 days. So what happens is we believe when there is a cash based foundation or accumulation happening on a stock, followed with an additional long build up on the derivative side. We expect this stock goes on with the rally and there is a follow-up buying, and it gives you a good 8 to 10 odd percent. So we believe 345 as a target on this stock for Indian hotels for December is where we are expecting it. The stock is somewhere close to 316 to 318. So that becomes a buy, and we have seen a good rollover of 91%. The second stock we like would be NTPC. NTPC again, that is more like a defensive stock, but then yes, this has come to a weighted average where the risk reward is more on the positive side, and we expect at least a good 6 to 8% surge on that. So 168, 170 as a base, we are expecting that to surge more towards a 188 to 185, which would be the target. The same thing, we have seen a positional long built up, additional position long built up of around 15%. What I mean by additional is the positions that we had in November exceeds, so the position that we have in December, I'm sorry, exceeds the November by a good 15%. And we have seen a positive bias in terms of daily buying. So we believe that these two stocks. Now, having said about the sectors, we have selected these two stocks because primarily this would be the one that we feel that in today's trade also has gained momentum, and that can lead it more on the upside. The next slide would be banks, wherein I'll hand it over to Gaurav, who will give you more cues on the same. Over to you, Gaurav.
Yeah. Hello, everyone. First of all, thank you so much, sir. So I'll be discussing about two stocks. First is IndusInd Bank. Let me first give you a brief on Bank Nifty, how it performed in November series. Bank Nifty gained 4.3% in line with Nifty, but with the rise of huge 70% open interest as formation of longs, and that long are rolled at good 88%. We believe Bank Nifty is still positively biased, and though we expect it has the more steam left in it, but stock selection would be critical from here on. We would prefer IndusInd Bank for the December series. And now if you talk about the stock has broadly been consolidating in a range from past 2 months. However, in November series, after taking support at 1120 levels, the stock gained 3% on expiry to expiry basis, with a rise of 5% open interest, which is longs majorly, and that too rolled at good 98%. We believe IndusInd Bank would outperform the index in December series and vows to have a positive bias on the stock. Holding 1150 levels, we expect the stock to test 1260, followed by 1300 levels in the short term. The other stock that we have is Infosys from IT sector. So IT sector has been the consistent laggard for quite some time now. But in last series, we saw some bounce back from the IT majors with the likes of TCS, Infosys, and HCL Tech. And if we talk specifically about Infosys, the stock gained nearly 7% with a decline of 15% open interest. And the rollovers at 85%, which is less as compared to its 3 months average of 93%, which implies the participations were not interested in taking the shots onto the next series, that is December series. We believe IT as a sector to contribute positively in the new series and prefer Infosys from the sector. We expect it to trade in the range of 1550 to 1750 with a positive bias in the new series. Yes, that is all from my side. Handing over the call back to Manoj sir.
Yeah, thanks, Gaurav. This would be the top two picks for Gaurav, at least from the banking stocks and the sector that he looks into. Guys, just to sum it up, at least on this side, before we get into the index strategy, the positioning from the FI side has been more on the positive side, almost a 16% more to what we saw last month. The derivative side, open interest, even today we have seen close to 2.5 to 3%, almost 4.5 to 5 lakh positions of Nifty being carried on the long side, and we have recommended a bull call spread along with the call option. So that is basically because of the long positioning again that we have seen today. And the second part is, it is always when the bank Nifty supports the Nifty, because we all know that the financial and the banks, they contribute to almost 0.38% of your indexes, these stocks. So when we have the single largest sector aligning with the trend in the Nifty, the trend has got strength. So we're expecting more outperformance from the banking stocks at this point of time. We like banks, IT, FMCG, at least as a sector that we believe we have seen a positive bias. Stock specific, we like 4 stocks for this month. One would be Indian Hotel with a target of 345. The current market price is close to 318. We like NTPC at 170 for a target of around 185. We like IndusInd Bank for a target of close to 1270 and Infosys at 1650 for a target of close to 1750. So we believe this is what at least the stocks and the sectors might do it. Now, coming to the most important part is the trend on the Nifty. So what to do on the Nifty and the Bank Nifty also. So we need to understand one thing. When the Nifty was closer to these levels of 17,700, last expiry was closer to that 17,700 to 18,000, and when the VIX was a good 18-19%, as I said, the entire month used to give you a good 700 to 800 odd points. So when you have such a healthy movement, that is when you can opt to go for a more riskier option, or a plain directional buying rather than using spread. But now that the VIX has come down to a 13.5 and we are almost at the live 5 for Nifty, we need to be a bit stringent in terms of understanding the net premium that we are paying. And because we need more Nifty to our favor, we would say that getting into a bull call ratio spread is what we recommend. So bull is because we are buying the Nifty, the direction is on the upside. Call because we're using call option to do this trade, and ratio because we are buying one option near and we're selling two options on the outside. So I'll just explain in brief what exactly the strategy is. Here we believe that the 29, which is the month-end option of 18,700 strike for the Nifty, we believe the price is closer to 200 to 205. We recommend buying that, and to hedge the position that because of, as I said, the volatility and the swing being less, we need to sell twice 19,000 call option. That is, for every one call option of 18,700 that we buy for the month end, we sell two call options for 19,000, same expiry, and the call option price is roughly around 95. So that gives you a spread of just 15, because 95 into 2 would be the premium that you receive, and closer to 205 is what you pay. So almost 190 and 205, the difference comes to 15 rupees. Now this has a potential to go all the way to 150. Now, for traders who understand these strategies and who are well versed, let me just tell you, 18,900 to 18,840, 18840 to 18900. This would be the level if it comes in before 15th of December, because we have the expiry on 29th. So we try to see where the time decay would start coming in. If where we expect the Nifty to do this strategy will give you a maximum, will give you good high returns. Though the target is 150, there is a potential of 200 to 225. The margin required is around 1 lakh to 1 lakh 25,000. But being a monthly strategy, this can be certainly recommended to all the clients who are holding cash margins and who have portfolios, who are looking for an alpha in the portfolio. They should be certainly suggested. For clients who are looking for a very short term, maybe 3 to 5 days, obviously the bull call spread that we suggested today, that is, we have bought the 18,500 and we have sold the 18,700 call option. That is a spread done at closer to, I guess, 72, which can be done, and which has a potential of 120. So if you look into all the maths and understanding, we expect that this momentum in the Nifty might be there for another 150 200 points. Mind you, the spot and the future is a good 150 points away. So we're talking about the spot Nifty. So we're expecting that to be closer to 18,600 to 700 odd, where we might see some sluggish nature coming in, and that is why we need the option selling to take care of that characteristic which the Nifty might do. So the view here is we are positively biased. If there are clients who strictly want to go for plain call option, we would say that the weighted average price of 18,300 on the spot is a better level. Now that might come or might not come. So that is exactly why we enter into a strategy. This can be done early morning Monday itself, and we have a good 29 more days or to 30 more days to expiry. So this can be done. The margin required is 1,20,000 odd. For the Bank Nifty, obviously there are long trades where we suggest more of call spreads. So just to sum it up, using a margin of 1 lakh, 1,25,000, this is a strategy which gives you a risk reward of 1:10, because if you see in terms of premium, that is, the net spread is just 15 rupees and we're expecting 150 on that. This is a strategy that can be done. And stock specific, obviously, not only derivative side, we would recommend that clients can be asked to buy in for delivery based buying on all the 4 stocks that we mentioned, which is Indian Hotels, NTPC, IndusInd Bank, and Infosys. So that would be the view that we have. This entire bullish view the only most important thing that I would want everyone to know, that till the time we are above 18,100, the reason why I'm mentioning 18,100, precisely it's around 18,118. Reason is this entire positioning of November to December that has happened has got a weighted average price closer to that. And the FI buying or the index long positioning would actually turn the NPM to be negative on the FI side, and they might look into some other trend or a strategy if the biasness has to change. So what we're trying to say is 18,100 and above, the bias has to be positive. We expect 18,800 at least on the Nifty. I guess that is the major crux of it. So Swaraj, if there are any queries on this, we can answer them or we can discuss that.
So I would like to request participants, if you have any questions or queries, request to type in our Q&A section so that we can address your query right away right now. So we have got one questions from MR. Okay. So can you please tell me regarding emphasis OFSS share? So it is not going to be a stock specific. We can just give you our research views on the index.
Right.
So
I'll just rephrase it, guys. For stock specific, obviously we have the email ID equityresearch@delegate.com, or the numbers are available. We can just call us up and we'll let you know on stock specific. But we're trying to hold this questionnaire more from the monthly point of view, wherein we discuss what the client can do for a month or with regarding to the stocks that we have selected at this point of time.
all right. So we have one more question. A participant raised their hand. Just a moment. So any questions? So we have got your view on Om Prakash Tripathi is asking your view on Bank Nifty strike price in coming week.
Okay, so if I understand this properly, it would be your view on the Bank Nifty and what strike price to buy. If I'm not if I feel this is a query. So as I said, we are positively biased on the Bank Nifty, and on the upside, we believe 44,000 to 44,300 might be the target. So the better strike to buy here is 43,000 to 43,400. This is a call spread that can be done. So you can buy a 43,000 call option, and you can sell a 44,000 call option and be in the trend for this month of December. So again, PNB and MCX, these are okay, these are stock specific, so we'll discuss that obviously when you send queries on that. If there are any queries regarding the index or the view as to what sector.
So Benjamin Robert is asking realty sector in December.
Okay, so if you look into this slide, I'll just take it here. Okay, so if you just look into this slide, majorly it is 96%, and today also stock specific, we have seen good traction and all the stocks are doing good. But the difference here is when the Nifty hit 18,200, the base of buying which came was majorly from three sectors. As I said, banks, we saw FMCG and IT. If you remember, we had call on TCS also, and it is doing good in today's share as well. So realty might be a good trading bet, maybe for a couple of days, wherein we might give an intraday or a positional call on that. But sector specific for this month of December, I would still say stick to the banking and FMCG. In reality, obviously, if there are any stock specific, Monday will let you know on that, because that would be more of a momentum call. But then based on this, we believe these four sectors would outperform. Realty is a good sector, but then it would be only on a short term.
So again, Mr. Om Prakash Tripathi is asking for the Ambuja Indian Cement. So these are again the stock specific. We are not going for a stock specific. If you have any questions pertaining to index, we are here to help you out.
Yeah, I see one query from Mr.
MR.
MR. Can I make a long position on it index? And if yes, then please mention an index target of which you can hold. So yes, you can absolutely make a long position. The short-term target, when I mean by short-term target, is the first expiry, weekly expiry we have is on first, and then followed would be 9th, if I'm not mistaken, 7th or 9th. So as of now, 18,300, that is the base. If you get a dip closer to that, you can take a plain vanilla call option, that you can simply buy a call option and wait for a target of 18,600. The stop loss should be 18,200. But if Monday you are planning to do it, the first thing you should be doing it, you should be doing a bull call spread, which we simply recommended, I guess, this afternoon around 2 o'clock. So what you can do is you can buy an 18,500 call option for the first December weekly expiry, and you can sell an 18,700. The difference, the spread is at 72 rupees. Keep a stop loss of 50, and we're expecting close to 120 rupees on that.
Thank you, Manoj. We have got another question from Daulat Khan. Have a 43500 call 1st December at 130. Hold or exit?
Yeah. So because this is a weekly call that you have for 1st December, we would recommend this to hold, because what has happened is the last couple of days, if you see net, even when the market started today, the bank nifty outperformed the first 1 hour, and then there were a lot of sectors which came in. So as of now, we should be holding this, because at least till Tuesday, we believe that till the time we are holding this, hold the 43,500 call option, we are expecting at least a 450, 500 more points at the bank nifty, so that can give you a profit or an exit on the trade.
Okay, right. So your view on IT index and pharma?
So IT as an sector, we like it. As I was saying, TCS and Infosys along with HCL Tech, these three stocks look positively biased. TCS, obviously, the major part of momentum has come in. We still like Infosys and HCL Tech, but if it is index specific, we'd look into it if it is a target that you're asking for. So to answer your query, if it is IT as a sector, we can still venture long in Infosys and HCL Tech, though we believe that TCS has had major part of it move. And can I make a long position on IT side? Yes, Infosys and HCL Tech should be the stocks that you should be buying at this point of time. So stock specific, you can just send us a mail. We'll let you know exactly the levels for both. IT as a target, I guess we have on the index would be 31,450 to 500. That should be the target, at least on the index that we have on IT. We see one question from Mr. Bala Subramaniam, wherein he asked for SBI Go details. I guess that would be answered more from the commodity side. So we can ask, or if you can send a mail to Equity Research, we'll ask the relevant research analyst to answer this query. Yes, Suraj, I guess that.
So we have got a question from Benjamin Robert, performance of metal in December. Any?
So Benjamin, if you just see, there is an analogy to obviously the China market to what the metal does, and we have always seen that. Now the major sectors, like the major stocks like Tata Steel and Hindalco, if you see, we have seen that been in a range. Now the query here is, if you remember the series from October to November, that is when there was some short positioning happening, but then it is only oil and gas which we are seeing some short term. So I would still say refrain from an metal sector at this point of time. If the Nifty rally is a good 250, 300 points, it would be back more from the IT, banks and FMCG stocks. So metals, yes, we can look into stock query and give you a call, a short term call, but we would not really recommend a positional trend or positional long thing on metal, at least at this point of time, especially these two stocks, which is Hindalco and Tata Steel.
Right. So participants, if you have any questions, request you to type in a Q&A section. I believe all the questions has been answered. Yes. So no more questions so far, Manoj.
Okay. So Swaraj, if that's the case, we can
conclude, right?
Yeah.
All right. So thank you all the participants for joining with us. Thank you, Manoj. Thank you, Gaurav, for sharing your perspective about the market. So with this note, we are concluding the session. Thank you for joining with us. Have a great day. Take care. Bye-bye.